What I'm definitely not doing is pulling money out right now because of fear of this possible crash. Because if it doesn't happen, the opportunity cost and the gains that I would lose because I'm just fearful and sitting there are too high. Well, it's been fun, but all good things have to come to an end. Forbes, Wall Street, and many other professional analysts are calling for a market crash this coming year, 2022. So we have to talk about it. So in this video, I'm going to give you my 5 rules of investing that have helped me build my portfolio. And then by the end of the video, I'm going to give you my thoughts on the crash that's coming in 2022. Now, there's lots of reasons why people think that there's going to be a big market crash in 2022. The first one is that the Federal Reserve has distorted stock market valuations by keeping interest rates artificially low, which lets more money enter the market to drive prices up. Basically just saying that since the interest rates have been so low, people have been able to borrow money super easy, and with that money they're throwing it into the stock market hoping to make a big return, which is very smart. But there's been talk of interest rates going back up, and so with that, that's going to mean that the money coming into the market is going to go down. And with that, a lot of the money that's coming into the market right now is actually coming from young people, and these young people are getting in because of apps like Robinhood making it so easy. These kids and young people are getting into investing at a rate that we haven't seen before. The other reason that there's such a high percentage of young people putting money into the stock market is because the student loan payments have been on forbearance, and so they haven't had to make that $200 to $500 payment every single month. Now, when that payment comes due again starting next year, we're going to see people take a lot of money out of the stock market in order to pay that off. Another reason we might see a drop, valuations of companies are just through the roof, especially electric vehicles, tech stocks. The price to earning ratios are insane, and everyone's hyped on the growth that's potentially going to happen, but at some point the numbers need to add up. Another reason that's being stated as to why there might be a market crash is just because we haven't had one in a while. Historically, we have some type of a crash every 10 years or so, and so at the end of the day, we're kind of just due for some type of a correction. So with all of this doomsday bad news out there, I wanted to give you my thoughts and let you know what I'm doing and how you guys might be able to stay safe through this. And if you're interested in content like this, please like this video. It helps me out more than you know. So now in investing, you can't totally avoid drops or market crashes or things like that, but you can set yourself up to where you're able to be safe. For me, I have 5 basic rules that help me stay as safe as possible, and I'd love to share them with you. So rule number 1 is to diversify. And now I know I talk about diversification a lot. I'm sure you guys have heard diversification a lot, so I'm not going to go over everything about it. But what I do want to make sure that you understand is that there's a difference between staying diversified within one asset class and diversifying overall. So in the stock market, you can invest in companies like Apple and Home Depot and Disney, and that would make you diversified within stocks. But that's still only one asset class. When I say diversify, I mean have some money in stock, and then also have some money in real estate, cryptocurrency, in retirement funds, some money in cash. And so if any one of those start to drop, so like if real estate itself drops, but the stock market goes up, you know that you're safe because one of them's going up while one of them's going down. And that's going to be very important. Usually when people get into investing, the first place they invest is into the stock market. And so to make sure that you're diversified in the stock market, the most important thing you could do is look at index funds. My favorite index fund is going to be the S&P 500 because it tracks 500 of the top companies in the United States. And since the United States has the strongest economy in the world and will continue to be one of the world powers because of business, I just truly believe that that's a very good investment long term. And I haven't really found anything that's much better than that as far as consistency. Rule number 2 is going to be to manage your emotions. Inevitably, the stock market will crash. When we say crash, though, we only mean that it's going to go down 10%, 20%. We don't mean that if you have $10,000 in your account, that you're going to go down to 0. And so knowing that there will be some type of a crash means that certain industries are probably going to take a big hit. And so that's another reason why I really like index funds. And that's why I'll always go back to the S&P 500. Because during a time where there is somewhat of a crash, it means that some businesses are having a very hard time and probably won't make it. In the S&P 500, there'll probably be 15, 20, 100 of those businesses that don't make it out. But the other ones that are doing okay or even thriving during a downtime will be able to hold everything together. And it'll be able to at least even it out. Maybe you'll lose a little bit, but but you definitely won't lose everything. Whereas if you did invest into that one company and that one company just had a terrible couple of years and had to file for bankruptcy and is no longer a business anymore, now you've lost your money. The market's going to go up and the market's going to go down. You cannot just sit there and try to time the market. And people who are professionals at this still can't get it right. So timing the market just does not work. Keep your money into the market, keep it in there long term. That will give you that compound interest that everybody talks about. Remember, you can only lose money if you sell. And don't sell just because the media is trying to scare you. That's their job. That's how they get views, but that's how you lose money. Rule number 3 is to make sure and invest with money that you don't need anytime soon. Say you need this money next year. At that point, the market drops 10%, 20%. If you absolutely need that money, then you're going to have to take the money out, which means you are going to lose that 10 or 20%. If you don't need the money, you can keep the money in. So even though it's down at the time, you can let it ride it out and then hopefully it'll go right back up. So buy and hold sound investments with money that you don't need right away, and then in the future, you'll be much happier that you just let it grow. Rule number 4 is to buy the dip. Just like I talked about earlier in this video, the market is going to crash at some point. The media is going to scare people out. People are going to sell because they didn't watch this video, and they're going to lose money, but not you. What you're going to do is when that market is down 10%, 20%, now it's just on sale. So that's the time when you're going to make your money. You're going to buy it at a discount, and then when it does go back up, because it always goes back up historically, now you will have made so much more money because you're smart, because you're doing your research, and because you bought that dip. Now, obviously, you have to make sure and do your due diligence and understand that it's a dip and not that the company is like going out of business and that's why it's tanking. But if you're in something like an index fund, it's rarely going to just totally die out. Small dips will happen. And so if you're able to capitalize on that, that's going to be huge for you and your portfolio. Rule number 5 is going to be make sure that you're researching things that are new. Try to stay up on the trends, see what people are talking about. You should understand these things and see where you can make some money. I know so many people that are 50 years old and above who just decided to write off cryptocurrency because they just didn't understand it. It's the same thing that happened 20 years earlier when people that age wrote off the internet because they didn't understand it. And so they didn't get to take advantage of things like Amazon and Google and all these other solid internet companies that made a lot of people a lot of money. Same thing can happen in cryptocurrency or in any of these types of things that will be totally new at some point. Now, my favorite investor is Warren Buffett, and he talks about only investing in things that you fully understand, and I am 100% behind that. Continue to learn, continue to research. Don't just push it off because you don't get it or that it's too new. Do the research and then decide why you don't want to do it. That would be a totally fine decision that you make. So now about this market crash that is supposed to come in 2022. Understanding that I have all 5 of my rules totally set up in the way that I invest, I'm not afraid of a crash that might come. What I'm definitely not doing is pulling money out right now because of fear of this possible crash. Because if it doesn't happen, the opportunity cost and the gains that I would lose because I'm just fearful and sitting there are too high. The inflation is too high to just put that money into a savings account, and I don't really want to move it to a different asset class because I want to stay diversified and have my portfolio allocations stay correct for me. So now what will I do if it does crash in 2022? Well, I'm just going to do exactly rule number 4. I know the investments that I've picked are solid. I know that historically they are on my side. I'm going to buy that dip. I'm going to put a little more money into things if it does go down 15, 20, 25%, knowing that eventually it will rise back up. It does make sense that there could be a market crash in 2022. I do agree with it because of all the things that I talked about at the beginning of the video, especially things like people having to start pay back their student loans. That is a massive amount of money that was going towards student loans is now going into the stock market for the most part because that was just a smart move for these people. But I doubt very much that over the last year and a half or so, people learned how to manage their money correctly. And so what's going to happen is they made a little bit of money, great. Now they have to pull that money out and use it to now pay off those student loans or any other debts that they racked up during this time. All in all, 2022 is going to be an interesting time, but I'm going to stick with what I know. I'm going to keep investing in things that I fully understand, and I'm going to keep telling you guys about it so that I can help you guys make some money and be smart and build that wealth. Thanks for watching. I'll see you guys on the next one.